All right, ladies and gentlemen, I hope you had a wonderful day. We have a ton that we need to talk about. Number one, crypto is going crazy after hours and has been going nuts all day. Number two, we have to talk about Bill Ackman covering his short and pretty much sparking the rally the entire day, even though he still ended up closing red on most indexes. And three, we have a bunch of earnings tomorrow morning, everything from defense stocks to Coca-Cola. Then after hours, you have Microsoft, Google, Snapchat, Visa, and a few others. And I have a whole breakdown with the up-to-date latest analyst expectations, and I even made a couple of plays today. So we're going to go over all of that, but it was another wild day. I'm telling you, the bond market, we woke up to another day of bond yields gapping higher or going down. If you watch the market, we even gapped down. And remember, Friday was not a good day, so we gapped down, but sure enough, Monday ended up being green, as the other 12 or 13 Mondays have been. But the real star of the show, it was the bonds, and the thing that changed everything. We had no data today, nothing to really look out for. Crypto was up like 5% in the morning, and there was a rumor about a CUSIP number being issued. This is like the identifier for ETFs and certain securities. So people got excited about that. Then there was news later that made it go up, and then after hours right now, crypto is moving, but outside of any of that in the morning, there was nothing else. We were just reacting to bond yields waking up lower, more war tensions, and people kind of nervous about that. And then another round of earnings not being good, when on Friday we didn't leave off on a pretty good note to begin with. So the bonds were down, and then it was like a couple minutes. You got an early stream alert. If you were on stream, we had it very early, and we even talked. We were like, okay, this might change sentiment, and this is something big we got to talk about, because right when Bill Ackman covered his bond, how do you know he did that? You wouldn't have unless he tweeted about it, and that's all he did. He tweeted about it. People got excited a little bit. You saw bonds get a bid, and the market went up with it. Eventually, by the end of the day, the markets all ended up coming down. NASDAQ held on a little bit, but the bonds were doing a lot better, and it was on nothing except Bill Ackman closing, and people were feeling good about that. But the reasons he brought up make it all the interesting, but I want to share something else with you. One, Bill Ackman said it has to do with the economy. He says there's a lot of uncertainty right now where he doesn't want to be shorting bonds, pretty much saying that something could go wrong and the Fed would have to pivot and cut rates, and that's why he doesn't want to be short on it. But that's not the main point. The real question is, why in the world would his comments lift the entire bond market, especially after we were dealing with a lot of pain? And if you remember yesterday's video, the other big factor of today, it was also where the market's traded at, and that was below 4,200. This is a very big make or break level. We were talking about how if the market can't hold above 4,200 with this much bearishness, then maybe there is a hard landing at play. And why I think this level is important is go back throughout the years. This is a level you have bounced off of multiple times. When you drop below it, the market got into turmoil. When you got above it, people felt good, and then once you fell back below, the market back into carnage. And then sure enough, right this year, when we went above 4,200, we went up 10% on the whole entire S&P. So this 4,200 level has a lot of meaning. We briefly broke it and came back up, but the funny part about all of this, it was all just based off of the bonds calming down. How in the world could Bill Ackman do that? Well, it's not really about Bill Ackman. The whole idea is it gave us a little bit of relief today, but if this does not last, it doesn't matter. This is something I've been stressing today, because if you remember 2 weeks ago, it was something very similar. You had the data, bonds gap down, then by the day we started going up, and that whole week we rallied all the way up until Thursday, and then the bonds started getting crushed, and then it led us into this last week we just came off of. But the whole point is, we've already seen bonds blow off top, get around 5, under 5 in this case, barely. This time we woke up above 5% on the 10-year, but the general idea here is we've seen 3-4 days of bond rallying that have led to another high on the bonds in a very short amount of time. So Can Bill Ackman help out and maybe cause some of the sentiment and that squeeze effect and kind of chill out a little bit? Yes. But if the other earnings aren't good, the data ends up being bad, and we run up into more issues, then this may be very well short-lived. So we are looking for bond stability. The only problem is you're going to have to wait like a week or two now to really actually get it and understand it, because like the last couple of weeks showed us, we could rally for the whole entire week, and by next week, you will be hitting another high. So that was a big part of the day. Bill Ackman covering the bonds and causing this unleashing, but still pretty bad overall. If you see here, getting us at an interesting part of October, that was number 1 and 2. I guess I did talk about the crypto, but now the only other thing we got to be focusing on moving forward is earnings. There will be a lot of consumer names in the morning, like Coca-Cola and even some of those defensives. I guess missiles aren't really a consumer stock, but there is that PMI data in the morning all across the globe that has a chance to move the bond. So whether or not we're going to see a rally, let's see how the Bill Ackman short faces in the midst of data, good or bad, or maybe it all supports it. But either way, now earnings after the bell, and that leads us to the good part. Let us get into the plays. So right off the bat, as far as plays, we're going to go over the earnings. I have a breakdown for you of the main ones after hours tomorrow. So here's the list. We went over these live on stream, but this is what you are going to be reacting to by the morning alongside that PMI data. Now, what I have for you on Microsoft, Alphabet, and Snapchat, I want to show you the earnings previews, but I also want to give you an update on how analysts have adjusted leading into all of the carnage. Pretty much you have heard about analysts raising and lowering ahead of the move. Well, there is a couple of updates with these, and I brought this up the other day because this will be important to monitor. So I don't know what's going to happen. I did go over a couple of option plays, and I will share those with you, but the thing is, we have no idea, and I'm sharing this with you now so we could get an idea of how some of these companies with raised or lowered guidance coming into the report, how are they going to perform? So here's the names, but let me go get them all up. Hold on, give me a second. All right, here it is. So let's start off with Microsoft. This is our traditional earnings preview, and this one is up to date. There's not that many changes. Pretty much analysts are right here with the numbers. Both analysts in the company, the forecast is around $54.52 billion, and here is what you're looking for. This is the analyst number, and then guidance is right here what the company gave. So in the case of Microsoft, analysts right now are expecting that productivity in business will bring in $18.19 billion, and guidance from the company was $18.3. Analysts believe that cloud is going to do $23.49, where the company has said $23.3 to $23.6. You get these ranges, but all of these numbers, you get an idea here, and the moral of the story for Microsoft, there's not too much divergence, and that's the thing. With some of the big ones, we haven't seen too much divergence. One, they're covered a lot by analysts, and two, this is why I think earnings is going to be such a big deal. If you do good and blow out these numbers, there should be a reaction, either good or bad, depending on the result, because I think a lot of people are hyper-focusing on these names. There's a lot of estimates, so for something to kind of fall out of the range, it means that something big has happened. So here are the numbers for Microsoft, and they're down 5.6% since last close. The market's down about 6 to I think even 10% at this point. This one might not be as updated. And then XLK Tech is also down 6.6. Options imply a 5% move. Last 4 quarters for earnings on Microsoft. The latest one, they lost 4%, then they gained 7 the one before that, lost 1, and then lost 8 as well. Revenue has beaten 17 of the last 20 quarters, and EPS has beaten 19 of the last 20. So this is all for Microsoft. Nothing too crazy, really. If you have read the reports, it's going to boil down to their cloud, the Azure. That has been the biggest focus. We've been hearing a lot about PCs as well with some of the chip makers, as well as their Microsoft Teams and AI and how that plays in. So we'll find out. But the answer for a lot of companies in the tech space, pretty sure it's still going to be cloud and then maybe some of the hardware and computing. But we'll see how Microsoft plays plays out. I did make a play on it, so we'll go over that here on the option chain. As far as the play that I made, it's pretty much what I showed you guys yesterday. The 2 standard deviations, the 295 put. I grabbed 2 of these for $60 a pop, and then I grabbed 2 of the 355 calls for 52 cents a pop, and it's just outside of 2 standard deviations, double the expected move. We went over that on yesterday's watch list. Thought I'd go with it, so it's like, what, 120 and 100, like 220 both ways. The other plays, I did go a little bigger on here, and if you remember, I did play the last Microsoft, Nvidia, Google, I think all of those on the pre-earnings, and if you remember, the pre-earnings run-ups last time, they weren't too good. We had a lot of success last earnings with some of the options with a little bit more time, but that were playing the earnings and the companies were already dead a little bit, so we'll see how this one plays out, but going to be writing that one into tomorrow, keeping it small. If anything, we can make one free, or if it's a small amount, could ride it through and play the earnings. But that is number 1. Then number 2 now, let's talk about young Google. And now this is where things get very interesting, because you'll see I have these little notations because this is the earnings preview. This is what it's discussing, or where the company and analysts are at. But what I've noticed is that where the analysts are at now, there is a couple of subtle changes. So this could give us a couple of hints, and it'll give you an idea of how analysts feel about some of these companies. And I will tell you, I bid thee to pay attention. I don't know why I keep saying that. I bid thee, but it's good to say. But if anything, look at the earnings that from last quarter. There's some companies that killed it. Google literally up 11.9%. I think Amazon did very well last earnings as well too. So keep that in mind, because some of these names, it could give you an idea of why analysts feel the way they do. But as far as Google, you'll see here the revenue showing 75.99, but the current estimate for guidance right now by analysts is 76.02. So the current guidance here, this is pretty much lower than where analysts think it's going to come in at. Then you take a look at services. That one's at 66.93 billion. Analysts are currently at 66.5, so they think that's going to do a little worse. Advertising is at 59.2 billion, slightly higher than where they have it at 59.14. This is where it gets very interesting, because their cloud has a very weird number. I have some analysts' expectations, like all of them, showing 1.3, and then I see one analyst at like 8.3 or 8.6. So this is a very interesting number. It kind of relates into the AI stuff as well too, but I do think that cloud number, I was just saying for Microsoft, this may be the black swan, for better or for worse, for Google, but we'll see how it plays out tomorrow. That's the one that really stuck out to me. They had updates on their hedging losses showing a gain of $35 million. I think the estimate right now is at $5 million. Everything else pretty much in line with what the company and what analysts are at. EPS, I believe analysts are expecting it to be $1.46, 1 cent higher. And then cash from operations, the company is expecting $26.07 billion, but analysts right now are at $26.68. And then the company was saying CapEx of $9.56. Analysts think they're going to be at 9.06, pretty much saving $500 million. And then free cash flow, the company was saying 16.3, and analysts think they're going to come in at 16.7. So the point is, most of the metrics where analysts are at compared to the company, analysts think Google should do a little bit better, and then their free cash flow is going to drop a little bit less. And like I was telling you, Google was one of the names that already did very well on the last earnings. So that's how it's going to play out. I think this one has a higher bar to beat. I think Microsoft is pretty much in line company, and where analysts at, they're like right in the middle playing the range. And now let's go to our favorite one, number 3. I got Snapchat for you. So this one is going to get interesting, because you see here, this is where the analysts are on the left, and when it says guidance, that's what the company has issued. But I noticed everything is very subtle. So for the most part, this is in line. And the thing about Snapchat tomorrow, they're coming off of that rumor of like leaked full year guidance. It did change some things, but for the most part, analysts are expecting 1.1 billion revenue, just on the lower end of the range that the company gave. None of the metrics overseas or not, they're wasn't big changes on that. If anything, the daily active users number, it looks like the company's at like 405.7, and analysts right now are like 405.8. Nothing crazy. Same average revenue per user and all of that. They have cash from operations. This is the biggest one, and we'll see how it plays out tomorrow, but company was forecasting a loss of 30 million or 300,000, and right now analysts are at break even. And then capex, the company was expecting 20.2, and analysts are thinking they're going to save $200,000 and come in at 20 flat. So all of the guidance, everything else is in line. Again, Snapchat, they are a loser since last quarter, down 23%. S&P down 6 to 9. Same thing with tech. Options are implying a 19% move. And last 4 quarters for the last year, loss of 14, loss of 17, loss of 10, loss of 28. Revenue has beaten 13 of the last 20 quarters, and EPS has beaten 12 of the last 20 quarters with 1 in line. So maybe they'll win, but I even think if you go the last 6 earnings, it might have been even worse. So either way, it's going to be a wild one, but the point is on this one, I think the bar is right in place. If anything, Google has a slightly higher bar. Seems like Microsoft and Snapchat are both in line. And now tomorrow, let's go off of the opening and see what we get from there. But as far as anything else, the other plays, I forgot to show you the other earnings plays. I did go for a meta play. This one was the 270. I only went on the call side, and this one was a trip because if you see where I bought it, and I think this was just because the volatility during the day, but I got it at like 9:46 a.m. So you'll see it like right around here where the options were. But I bought 2 of them or 4 of them at $60 a pop. But 9:46, when you take it to the chart, you'll see I was pretty much at the bottom of the day, and it ran up, but those options are down to 40 cents now. So that one was a real trip there, but I went for an upside play. Again, the options, everything was selling off. I figured this was the 2 standard deviation one a little further out, grabbed 4 of them at 60 cents. That was my second earnings play, and then I went for Intel later this week, and this play was actually doing good. I had the opportunity to get it at 10, got filled at 12. At one point, it was going up there to like 14 or like I think even show like 16 or 17 on the bid at one point. It was going pretty wild. This was the first play that actually started moving, and then that news there with NVIDIA getting into CPUs and hiring ARM. We had that news very early on stream. You even got a free stream alert if you saw that, but that brought down Intel, kind of destroyed that play. That one dropped about 50% instantly, and then the final play that I made on the day, this one is very interesting. This was right after the Bill Ackman news. I was making all of these earnings plays, but it was ARK, and the reason was because Bill Ackman covered his bond short, and I've always talked about how ARK is like a ghetto rate play, and well, I saw the opportunity with earnings and everything else and how beaten down things are. If there is going to be a rally, got some time on this, and I played the January contracts. Again, that option chain ran deep, but the only sad part about this time around, it doesn't like, there's not that much time. It's only 88 days left versus what we were playing like 3 months ago, if you really think about that. That one was a wild one, but I decided to go with these contracts right here. It is the $46 call. I grabbed 10 of them at 38 cents a pop. So they were up and then they came down with the market and everything else. But that was everything else. Besides that, going to be watching earnings, see where it takes us, see if the bonds could hold the rally, and then hang on for the rest of the week and where we end up. But that is your watch list, ladies and gentlemen. Make sure hydrate healthy, ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. And I need you to remember amor fati and what comes with that same Latin phrase, momentum mori. That's what I said. Bring meaning to the life. It's not that morbid, dog. It's very simple. Bring purpose and meaning. The fleetingness of life means you have a time here to do something. It's not mean that it's for meaninglessness. Oh my gosh, I'm getting, you have to be there for the philo, man. You have to be there for the philo. I love you, Chad. God bless you. Maybe I'll see you on 2K tonight, but I love you. God bless you. See you in the morning. And horn.